It's time to do business indeed, Chamberlain. Thank you so much. Good morning, everyone. Welcome to Business Morning on Sunrise Daily. We do business for just about 30 minutes before we head back to the Sunrise Daily studio. Starting from the global space, oil prices inch higher on Friday as investors weighed supply concerns in the Middle East, although signs of weakened demand limited gains. Look at the numbers now, and we have to tell you that October delivery expires today. That means after today, we'll be looking at the price of the November delivery. You know, these things, contracts are forward. So for October delivery, which expires today, we see Brent has gone back to $80, $80.17 for Brent after it gained 0.3%, while WTI of the United States is $76.09 after it has gone back, gained 0.2%. And the factors driving this is in Libya, mostly today, because half of Libya's oil production, which amounts to about 700,000 barrels every day, has been offline since yesterday, and exports were halted at several ports following a standoff between rival political factions. Meanwhile, Iraqi supplies are also expected to shrink after the country's output surpassed its OPEC plus quota. Iraq plans to reduce its oil output to between 3.85 million and 3.9 million every day, barrels per day, from next month, that is September. Look at the Naira close now, a bit of appreciation now, and warm to the heart, but hope it's sustained. But I mean, the good thing, I guess, is we should just see that the Naira has been between 1,500 and 1,600. So even though it dropped to 1,600 at the close of Wednesday's trade, we've seen it's recovered that. There was a 0.79% gain on the Naira. So even though it opened at 1,606 Naira 56 kobo on NAFEM, it closed at 1,593 Naira 93 kobo, while NAFEX closed at slightly higher than that, 1,592 Naira 71 kobo, after it gained 0.91%. It's expected that rates will hover around 1,005 and 1,006, except something really big happens to the market. And talking about the Naira now, currency outside Nigeria's banking system dropped to 3.66 trillion Naira in July 2024. That marks about 3.32% decrease from the previous month, and this is the second decline this year. I mean, the biggest fall this year. The decline reflects that the central bank's ongoing efforts to tighten liquidity and encourage bank deposits seems to be yielding fruit. The decrease is more significant than the 0.6% drop recorded between March and April. Despite this, the total currency in circulation increased slightly to 4.05 trillion Naira in July, suggesting a stabilizing economy, possibly due to increased digital transactions or regulatory measures. We'll talk about the impact of that, what that could mean. We'll discuss that in a couple of minutes. But first of all, let's go to another news which came out yesterday, and that's that the Nigeria Securities and Exchange Commission has approved 2 crypto exchanges, Quidax and Busha. We've been talking about this on a crypto segment. Now it's done. It's in the open, and it's under Accelerated Regulatory Incubation Program, ARIP. This approval, in principle, gives them official status as crypto trading platforms in the country. In addition, the SEC has admitted 4 digital asset firms, Trovotech Limited, Wrapped CBDC Limited, Dream City Capital, as well as Housing Exchange.ng Limited, to test their technology under the Regulatory Incubation Program. The capital market regulator says it is reviewing more applications for approval and emphasizes that these current approvals are steps towards full registration, granting legal recognition to these platforms. As you would expect, at 1 p.m. during Business Incorporated, we're going to settle on this and talk about possibly expectations. We do know, of course, the central bank has not exhibited very friendly sentiment towards the crypto space. And of course, everything is in the financial sector in the same country. We'll talk about this later on at 1 p.m. That will be during Business Incorporated. Now, what's going on in the corporate? We can tell you that In Citibank, there's a new boss in town, Nneka Nwereji. She's been appointed as the new Managing Director and Chief Executive Officer for Citibank Nigeria Limited, effective August 19, 2024. That follows the approval by the Central Bank of Nigeria. Nwereji succeeds Ireti Samuel Ogbu, who has retired from Citi after 36 years of service. Prior to appointments, Ms. Nwereji was Citi's head of global network banking across the sub-Saharan Africa subcluster, and she led the team in achieving record business growth amidst considerable market complexities. Her previous roles include the GNB co-head for Middle East and Africa, and also Africa Trade Services. She was the head and financial institutions of Sub-Saharan Africa Trade Head. She brings a wealth of experience, and her 31-year banking career spans markets, corporate investment, banking, transaction services, risk management, and operations. She's been an executive director on the Citibank Nigeria board and has also served on different boards in a non-executive capacity. She holds a degree in computer science and economics with first-class honors from the Obafemi Awolowo University and an MBA from the Warwick Business School in the United Kingdom. She's also attended executive programs at Yale School of Management and University of California, Berkeley. Commenting on her appointment, she says she's excited about this new chapter at the helm of Citibank Nigeria Limited, and she's excited also about working with her dedicated team to deliver full value of Citi's network to clients and stakeholders. Now, the Federal Competition and Consumer Protection Commission, the FCCPC, has given traders in the country 1 month deadline to reduce exploitation of prices on goods. The FCCPC's Vice Chairman, Mr. Tunji Bello, made this known during a stakeholders meeting in the Federal Capital Territory, Abuja. Mr. Bello highlights a case where a blender cost over 944,000 naira in Lagos, compared to $89, which is about 140,000 naira in Texas, criticizing such pricing practices as harmful to the economy. The FCCPC says it will start enforcement actions after the moratorium ends, with severe penalties for violators. The Consumer Protection Agency therefore urges stakeholders to cooperate and correct their pricing practices before enforcement begins. Now, yesterday, that's a big collaboration between Nigeria and Boeing, and we did bring that story to you earlier yesterday. It was also on Business Incorporated, and this relationship is supposed to cover a whole lot of grounds, including regulation, safety, services, maintenance, the relationship between Nigeria and Boeing. And there we see the Minister of Aviation here in Nigeria right there, and some stakeholders in the aviation sector representing the country as that MOU is signed in Seattle, Washington. And this was done earlier this week, and we expect that we would see the workings in a couple of days.
When the minister came on board, one thing we continue to see that is a great difference is that he has a listening ear. Few occasions I've met with him will always say policy, policy, policy. Remove the blocks, remove the clogs along our way, and the rest will flow just easily. We thought we were just saying what we have to say to one of those government officials. But we didn't know how much the minister took it. And when he started running, his pace is fantastic. So, the Honorable Minister, we're happy that we're here. Boeing, thank you for what you have conceived for us and what you are still planning for us. By the end of this whole game, what the minister is doing with the Boeing is over. What he's doing with the laws in Nigeria is completed. He will eventually, at whatever time he will bow out as a minister, would have become the father of the modern aviation sector in Nigeria.
That was Professor Obiora there, a major stakeholder in the aviation sector in the country. And of course, we're looking for the goodies that will come from that. The signing ceremony that was held right there in Seattle, USA. Now, let's go back to that story about the currency in circulation dropping and perhaps if it's a good thing or not. The currency outside the bank drops. Implications for the economy. We are having this conversation with the Chief Executive Officer of the CFG Advisory, Mr. Tilewa Adebajo. Mr. Adebajo, good morning and thank you for your time.
Good morning.
So should we be celebrating this? Seems like the target or the aim of the central bank is gaining fruit.
Well, unfortunately, I'm a fan of currency outside the banking system. And the reason why I'm a fan of having a lot of money in the currency outside the banking system is because the informal sector in this country contributes 50% to our GDP and makes up 50% of our economy. And this is the lifeline for the informal sector. But when you have a situation where you have inflation that is high and persistent with stagflation, I think it's important to constrict as much of the money supply as possible, especially when total money supply has increased by 75% year on year to a record 100 trillion. So I think it's important that we constrict as much of the money supply for now, pending when the economy can recover, and then we can begin to go on a path of growth. So mixed feelings, mixed results.
Well, shouldn't we be looking the way of financial inclusion, for instance? Perhaps we do not really need that much money in circulation. We should be looking at the way of expanding the inclusion net when it comes to financial. So even the informal sector can be captured, and it will also aid planning.
Well, yes, but if you consider the amount of population in this country, if you look at the population of this country and if you take a look at the amount of bank accounts compared to, there are more mobile phones than bank accounts in Nigeria. So the banks have not really gone through that financial inclusion step, and we're moving there. A lot of progress has been made, a lot of progress remains, but I think cash is still king when it comes to the informal sector economy in Nigeria today. But we must admit that there has been significant progress with digital transactions, which has reached record levels.
So now we've seen inflation taper, we've seen GDP grow to above 3%, we're seeing currency in circulation reduce. Does it mean that the reforms that, seem to have been tightening us before now, are we beginning to see the fruit?
Well, not really. What I would say is the fact that the economic recovery is on track, I think without a doubt. My own prediction is that it's going to be an 18-month period, and we should begin to see results by June next year if we stay the course. But what we are seeing now are good signs. The direction of growth and the direction of inflation, the trajectory is in the right direction. Although not optimal, but I think what that tends is that it allays the fears of recession. So what is clear now is that we're not going into a recession, and I think that is positive, but a lot of work still needs to be done, especially on the fiscal side. We must acknowledge also that the debt to revenue numbers have reduced by about 30%, which is also a positive signal. 4.5 trillion of ways and means has been paid back. And revenue collection has improved with the use and deployment of technology, which is putting more money to the subnationals. The states are getting a lot more money. And also the exchange rate differential tends to help. The volatility for the exchange rates have abated, which is also good. But a lot still needs to be done, especially with the social intervention programs. You cannot... It's like you're going to the dentist to remove a tooth without anesthesia. So these social intervention programs are critical to cushion the effects of these reforms. And as we've seen with the 2-day strike and protest early in August this year, social unrest is a critical issue. And as we say it in Nigeria, stomach infrastructure is something that is critical. So while these reforms are going on, government needs to step up on the social intervention programs.
Yeah, but wouldn't you say they are doing a lot in that area? We've seen the suspension of import tariff for some basic staples. We've seen trucks of rice being sent to states and among others. Wouldn't you say that is enough? Or which other area do you think could also be added to what's already in existence?
Yeah, with all due respect, sending trucks of rice to states is not the solution to this problem. This is a bigger problem than sending trucks of rice to each of the states. I think one of the things we should look at is the tariff structure which they have reduced for food importation. I think that's a step in the right direction. There are structural issues that we need to address in terms of food security in Nigeria. And I think that the security situation in the Northeast, the Middle Belt, which is the breadbasket of Nigeria, which is preventing farmers from going to farm, I think is something that we need to address. Because if we cannot produce locally, then because of insecurity, then that is a challenge that we need to address. The structural issues, like I said, these tariffs, these short-term tariffs, I think are a step in the right direction. But there are fundamental issues that include structural reforms that we also need to address. But what is also not helping is the reckless expenditure by the federal government. I think fiscal discipline, I think, is also very important. If you lead by example, I think a lot of people will follow. So those are the issues that we need to address. The issue now is the fact that stomach infrastructure, hunger, is a number one issue in Nigeria today. And if you do not address these issues, it will impact negatively on the desired results from the reform program.
So I think another area that might also call for attention is the issue of infrastructure, post-harvest losses, infrastructure, getting the products from the farm to the market. Apart from that, security, which is a major one, because of course we know that post-harvest losses in Nigeria is about 50%. And also now we see prices crashes, so some of those crops, because it's harvest period. And then after the harvest period, most likely we get back to status quo. So I guess we also have to look at the issue of preservation, storage, and infrastructure, logistics to get those crops to the market.
That really is not a problem if there's a demand for produce. And I think there's no way that you do not sustain a bit of loss in terms of production. But I think government should now focus its intervention, after all these crops have been produced, all these produce have come out. Government should now focus its attention on the intervention to reduce post-harvest losses. I think if you're intervening in that area, then I think the benefits will be more significant. And I think that should be the focus once we can restore agricultural output to the pre-banditry levels.
Well, we look forward to those days. But I know that CFG, you have your forecast and you'll be looking at the numbers. How do you see this year, 2024? I know you said the reforms benefit should be in about 6 months, which is next year. But how do you see this year ending, 2024?
Well, the way I see this 2024 ending is on the trajectory we're going. As we can see the inflation trajectory is coming down. There's really no issue with the increase in the electricity prices because I think people have been using both generator and electricity at the same time. So if electricity is more expensive and I think it's more available, then I think people are spending less on the generators. So there might be some sort of savings there because your electricity bill, you're used to a certain level of power bills. The challenge now is the price of PMS, fuel. I think from what we're seeing with the shortages, I think there's no doubt that we should be looking at fuel prices going to about 1,000 naira per litre. It is this impact that concerns me in terms of being able to manage inflation, because the inflation trajectory is on its way down, though slightly, and we need to be steadfast with these policies. My expectation this year is for us to be more steadfast with these reform policies. The government needs to press the reset button, and more importantly, I think the time has come whereby government needs to sell some of its assets, which is like restructuring its balance sheet to be able to get more equity into it. NNPC has about 35 billion barrels of oil proven. If you look at this and you multiply it by the oil price of maybe $50, you can begin to understand the value of that oil. NNPC balance sheet is about 246 trillion. But it has idle assets that it has spent close to 22 trillion on without any desired results. So it is important now that the government should begin to sell down the oil mine licenses and the oil producing licenses to about 49% or even more than that, so that the serious players can begin to invest in that. And in the process, the government can raise $50 billion. The $50 billion the government will raise will help it reduce the debt burden and help it recapitalize NNPC so that we can have sustained revenue and, more importantly, foreign exchange availability. Because the inefficiencies in NNPC is weighing Nigeria down at a point in time where oil prices are $80 a barrel, where Nigeria should be smiling. More importantly, all the cancelled. They should be refinanced with structured debt, most probably long-term Euro bonds, which is cheaper, is more transparency, and we can get more accountability. So there's a lot of work that needs to be done within NNPC to ensure foreign exchange availability and revenue assurance for government. So I think this is now long overdue, considering where we are right now. If we can do these things and steadfast with this reform process, then we should end the year better. But like I said, all these policies are not of concern to me. The most important...
Seems we lost Mr. Adebajo there. I do hope we can get him to complete his thought. And was talking about the inefficiency in the NNPC. Yeah, you're back. Yes, you're back now. You can complete your thought.
Important issues now are the hunger issues. And I think this is really what the government needs to address urgently.
So you talked about, of course, the debt burden, funding the budget and all of that. We know that today, I think today is the last day for that first USD domestic bond of the federal government, where they hope to raise 500 million. But of course, if our oil production first and foremost increases, then we could also look the way of reducing those borrowings, because it looks like they may go for a second one because they said it to be in series, in tranches, so suggesting the sale of assets and all of that. But we've been talking about this for a bit, that's the sale of government assets, the cost of running the government, but it doesn't seem like we're moving forward with that. I wonder if you think there's something that can be done, perhaps the people, the media, to push the government in this direction.
Well, I think what is happening now is that we're getting to a situation whereby we cannot continue to borrow. Although there's been a 30% reduction in revenue to debt ratio, which is positive, giving the government some headroom, the debt profile is now close to 121 trillion naira, which is a record high. And the debt, the cost of servicing that debt this year alone is close to 8.5 trillion naira. So clearly you can see that we can no longer continue to go in this direction. So I think it's long overdue that we begin to take a look at all these things, because if we do not address these issues right now and head on, then it can stall the reform program and it can begin to cause problems for us, by this time next year. So it's very important that government takes some drastic steps. We still have the capacity to borrow, but at the end of the day, when that capacity stops, what are you going to do? So that is why it's important for us to begin to sell down some critical assets now and raise money to ease this debt burden.
All right, Mr. Adebajo, thank you so much for sharing your views with us. We do hope in the coming days and months that we would see some direction towards, some action towards that direction. Mr. Tilewa Adebajo is the Chief Executive.
Thank you.
Let's take a break now. When we come back, we'll see a bit of the market numbers from yesterday's close. To stay with us is Business Morning on Sunrise Daily. Welcome back. Still watching Business Morning on Sunrise Daily. Let's see a bit of market close from yesterday, Thursday, and well, a good thing is that the NGX recovered at intraday and sustained that green number to the close of trade, and so we see that the market gained 117 billion on the market cap at the close of trade, even though we're still within the 55 trillion naira. All share is 96,000 after it went up 0.21%, and the movers yesterday were in volume, that's the activity charts were mostly in the green. Only the deals went in the red, lost more than 2%. And so we had some of the figures gaining yesterday. Zenith Bank still in the market. We saw that one was in the green. But the counter, however, talking about the sectors, the counter was closed in the red, 0.75%. Consumer goods, however, recovered 1.26%. Industrial goods slightly down. Not a lot of movements going on right there. Insurance seems to be the star of the day. We see Veritas also doing some moves. Investors are getting really interested in that. And oil and gas is retaining that positive sentiment around a top trades yesterday. Hall, PLC, FBN Holding. FBN Holding is back in court. We know that issue has been lingering within the shareholders. So they're back in court, but that put them in the news yesterday, so they were in top trades. Access Co also part of that top trades yesterday. Look at other markets. The smaller NASD markets, for instance, doing really good, 4.57% at 1,797.85 market cap, still within the 2 trillion naira, 2.46 trillion naira. That's for it. The activity yesterday was mostly green, so you have volume up very high, 856. More than 856%, value more than 100%. Our deal was in the red, and stocks traded was unchanged. Now let's see the fixed income market. Look at some of those numbers from the Treasury bond. We see that the secondary market opened on an active note yesterday, driven by continued demand, particularly for the mid to long dated securities. The August 2025 OMO papers, we know that the CBN is back in the market trying to mop up. I guess that's some of the results that we see when we see a currency outside the bank reducing. So for the NTB maturity, this is for the Treasury bills, not the OMO. We can see the rates looking good at almost 20%, especially for the July 2025 and as well as the March 2025. Let's see for OMO. This is the CBN's instrument to mop up liquidity. The rates are looking so good, so you can imagine that it will have a lot of response. That's why we had an active market yesterday in the open market securities, and at 21.40, you know, you're close to covering up for inflation right there. And I guess that's much we can take, but we promise you at 1 p.m. It's Friday, so it's just you and I. So please, let's make it a date. 1 p.m. Business Incorporated will give you intraday numbers, and then we'll have conversations for 55 minutes. Let's head back now to the Sunrise Daily studio.